Is that Stacks? Look at that. Ken, Mac, Nico, Pedram, crew is jumping in. All right, so I before I jump in, I wanted to give you guys a quick overview. I think anyone that's been trading for a while has, or really, if you want to make this a thing for yourself, if you were to go work at a brokerage or anything like that, every Monday, just like every other job, you're going to have a meeting. We're going to do this a little bit late just because I know everybody likes to get up and go, and the market's already going today. But the purpose of Monday meetings for any trader is just to get a quick pulse check on the markets as a whole. Download all the important economic data that happened the week prior. So we'll do a quick recap, look at what is coming this week so that we can have an idea of how the market may react to certain things, know what we need to be aware of as we're moving forward. And then we'll take a look at a couple of our kind of stocks that were on the radar. And we post some of those in the analyst watch list. I will say we try not to put a ton of them in there. There's a lot of trades going on at any given time, but for us, it's easier, a little better to focus on a handful of the very best ones that we can find. That way you don't get distracted as the week goes on. So that said, I think I'm just going to go ahead and, do we have Ryan? No, right. Morning. Just move on real quick. I think this is, before we get started, need to point out options are not for everyone, and you should read characteristics and risks of standardized options before you begin trading. You can get a copy of that by calling 1-888-OPTIONS. So I am just going to jump in. We don't have slides or anything like that. But last week we were looking at the markets, and it was kind of beginning to look like a decision week of where is this seasonal trend going to pivot, right? We had a couple key levels in the S&P 500 that we were looking at, and I will tell you here is last week, right? And this whole little section right here is what we were looking at. And so what happened, we had a 445 level that was right here. And we said, hey, if the market closes above this, then really we've actually begun to change the course, right? So why we change the course? I think a couple of people asked some good questions. I'm just going to use quick text, right? And so
Jason, we can't see your screen.
Ooh, good call. Share screen. 1, 2, 3. So I'm just looking at the S&P here, SPY. You guys see me now?
Mm-hmm. Yep.
So HH stands for higher high, right? And I'm going to duplicate this. So I think it was Zaid, one of our guys, asked, why is it an important week this week? So I'll tell you why. So higher high. So we have, high, low, higher, low, higher high. And this right here was a lower low. So this was the beginning of the first shift, right? And so since then, we've had a lower high here, a lower low. This would be lower low. This was a LH lower high, another lower high. So this would be lower high, lower low. You guys see this? Lower high, lower low, lower high, lower low, lower high. But last week, what happened was we got a higher low, right? So higher low is going to be, let's say, bullish, right? And then we proceeded this higher high because it's above the prior high. Now this week, what we're going to be looking for is either one of two things. We're going to be either looking for one more higher low. Market's a little extended now, so that's fine. Or a continuation, maybe even a higher low up here, something like that. So this week will tell us, do we have this break in trend? And that's really why this week is going to be a critical week for the market. I know seasonally, November comes around. It's probably one of the best months of the year. So let's take a look at what is going on. So this is just a basic fxstreet.com economic calendar. This is free. You can go here if you want. I've already got some filters in. But so what started to happen, and why taking a quick check of larger economic factors is always important. So we had Tuesday, we had JOLTS. So JOLTS is how many new jobs are out there in the market. This is a good barometer on how well the economy is doing as a whole. And as I'm going through this, I'll try to be pretty quick because we'll do this hopefully every Monday. What moves markets is not results, right? We're coming into earnings season. I should preface that with, if a company has good results or any result is good of any flavor, that does not move markets. The only thing that moves markets is when something is different than what's expected. So here, there's this thing, it says consensus. Hopefully you guys can see it. So consensus is all the economists, analysts, what have you in the market. They get together. Who knows who they are. But in total, this kind of aggregates what is the average expected outcome. And so if it's good, even if whatever number comes out, if it's a good number, it doesn't move a market. The only thing that's going to change or move a market is when it's different than what the consensus or what's expected is. So we'll go through this and show you guys what happened last week. So job openings slightly lower than expected and lower than prior, right? That's not a huge difference. So that did not move a market. We did have a lot of Fed speeches, and we also got FOMC report minutes later in the week, and we'll go through that. But this is the first big number, right? And that is consumer price index. So this measures inflation. Again, it's 4% was the number year over year for September. This was as expected, so that didn't move markets. So even though inflation's a big factor, because it came in as expected, it's not going to move a market. If this were to have come in, let's say at 3%, that's a big difference than 4 versus what was expected. That would have moved the market. But this came in very cool, not hot, kind of Goldilocks. So it wasn't bullish. We will call this non-bearish, right? At the same time, we got these FOMC minutes, and this is Wednesday. So this was the first non-bearish news that really started coming in. Inflation is not rising right now. And when people look at FOMC minutes, really what they're looking for is kind of the conversation between Fed governors and who's changing from hawkish to dovish, right? Hawkish meaning like we need to raise interest rates. Dovish meaning we want to lower them. And really what we started to see was there were a handful of governors that were kind of starting to lean towards the more hawkish side. But again, that was expected. You don't have a metric here to see that. But what that means is it's rates going back up is expected. And that was no surprise to the market. So again, not bearish. Right. Thursday, and this is where things really started to kick up. We got this thing, producer price index, right? So producer price index, if consumer price index is what the consumer's inflation rate is, well, producer price index is what the producers of those consumables inflation index is. And that actually came in below the consensus. So this did start to move markets a little bit. What this is saying is, okay, so the consumer's inflation didn't move. And the next logical thing to look at would be, well, are the producers' inflation rates going higher? If they are, they're going to pass that inflation down to the consumers, and therefore the consumer price inflation rate would rise. In this instance, it did not. So this is actually more of a bullish number than anything else that came out. We also got initial jobless claims. This slightly lower than prior. It's not this isn't really moving markets a lot just because it's so hard to really look at anything. What was cool was this initial claims number, 293,000. I think that's the lowest number. We expected 319, 329 before. I believe this is the lowest number that we've had, and you can just drill into this stuff. So yeah, so 293 was last week, and this is very frequent data, so we'll get it almost every week. So from 400,000, down to 300s, low 300s, and then this is the first number we actually got with a 2 handle in front. So that is bullish. So you guys can start to see some of this data was coming in at the back half of the week, and it started to push things a little bit towards the more bullish skew. This is the number right here, retail sales, and you see retail sales month over month for September. This is what's going to change a market. So if the consensus is that retail sales go down, and the number comes out Friday morning, and it's a positive number, that's a big difference, right? So this is like the kind of straw that broke the camel's back, so to speak, right? This is the one number that actually ended up pushing the market higher and letting us close with a pretty nice gain for the week, and actually well above everyone's 50-day moving average. So this is important stuff to note. We put this in the market outlook every week. I'll try and release it Sunday evening. And I'm just giving you guys, here's a recap, right? What we're looking at is, as the week comes through, so this is last week. Now we're going to look at this week. This week, we want to look at what's going on, right? We don't actually have a big, data week in front of us. What we could say, so most of the time, third week of the month, we'll start to get some of these housing numbers. So housing numbers, here's where it comes. The market knows, okay, housing prices are pretty hot right now. That's probably not going to be a big market moving event. Let's see, what else do we have? We have a lot of
I have a
governor's
question.
speech.
Do you think that inflation? Hello.
Hey.
Good afternoon or good morning for you,
Morning.
whoever's back there. Liger, don't know where you're from. Sorry.
Yep.
But in any case, do you think that inflation has been artificially kept low by governments in order to justify the rates and stuff like that?
Has inflation been artificially?
Because now if
pretty
people,
high.
like especially in terms of government bonds and in terms of corporate bonds, like those structures are completely like, why would you pay if there is rapid inflation, which there probably is for at least a little period now, due to COVID and what we'll continue to have probably, which is I don't know. I guess they're going to try to control it more than in the past, and not let it get out of hand, of course.
Yeah. So I think I don't have an answer to, do I think that they're artificially holding inflation back one way or the other? I think that the Fed has specific tools at their disposal to control inflation, right? And you have a Forex background. That's Jerome, if you don't know. The way inflation works is, we can print as much money as we want, but it actually doesn't mean that inflation is going to go up. So, and I'll just paint you a quick picture. If you owned a business and the government is, giving out free money to everybody, but nobody's coming into your store to buy your goods or services, you're not going to be able to raise prices. So your prices, if you're the business owner, are inflation. And when we talk about inflation in terms of the market, they don't include, and I think it's kind of stupid, they don't include things like food or gas. That's what that core inflation number means. It's core CPI. Yeah. It's everything except our two biggest expenses, food and energy. Exactly. So back to the example, maybe the government prints all this, funny money and gives it out to everybody. But if those people aren't coming into your store to buy your stuff, you can't raise your prices, and therefore that inflation number doesn't go up. Actually, if they're not coming in, you have to lower your prices to attract new customers. And so that's actually why, I'll go back to, last week, that's actually why this retail sales number, so retail sales, is kind of a tough one, right? So if you see a high retail
Very
sales
quickly,
number,
concerning the core CPI and the energy, I
Yeah.
think that that's a great point. But I also think that the energy, because what's important to you, if you're looking only at your like economy and you're trying to see if there's inflation or not, when gas is mostly, or there's a high amount of trading, and like the price of gas like can really cost a lot, and also investment has probably been down in many places, so the supply might not be exactly what it could have been with the shale uh, digging or whatever you call it, that they didn't end up doing. So because of that, the supply is a bit lower. But at the end of the day, what's important is how it affects your businesses.
right?
And so the increase in gas on businesses for like how your economy is running is probably a little bit lagged behind, because it takes like a little bit longer to enter really properly in the balance sheets. And so it might take like a couple more months.
Yeah,
But I do think it's like, I think it's there and I think it's coming, but a little bit more, but I'm not sure.
no, absolutely. I think this is one of those, this retail sales number. It's in terms of energy. We'll get to that in a second, because that's definitely been something I added crude oil futures to some of the metrics that I look for to get a gauge of the general market. But yeah, so they're still spending. I think retail sales, this is a good number, yes, but I think, as we go through earnings season and we start getting a lot of this information, there's going to be some pretty key themes that we want to look for, right? And so there are things like cost of good, right? Cost of goods, or, what is my running cost, operating cost, right? That's going to Jerome's point, to oil, gas, energy. It's also going to, and I would assume that supply chain is going to be a pretty big factor as we go through earnings. So we don't really want to be in front of in an equity, let's say, that if we're trading it, that would be, have a high risk of being susceptible to some kind of supply chain issues, right? So like we can have maybe short dated stuff, but we need to know, hey, look, this is going to be a common theme in my estimate for this current season, and probably for the rest of the year at minimum, probably the first quarter of next year too. So things like that, operating costs and supply chain issues, that's really what we're going to be looking for. To your point also, there is, oh, great, filter, clear, yep, apply. I look at something, did this go this week? Apply. Baker Hughes rig count. So oil, here you go. So 445 is this last rig count, and this has been slowly going up, like 10 rigs a week. You can see the numbers here. We're in the low, mid 300s to high 300s now, low 400s, and every week we're slowly increasing. So oil is still going up from a like commodity perspective, but we should know that, hey, look, they really are, regardless of what anybody says, this is raw numbers, right? They really are starting to produce more oil, and so more supply will be coming.
But the question is whether, if there was not this green shift, had there been more rigs currently, and had that not been expected, probably as well.
That's probably a different question that's a deeper question for sure. Typically I would say that we would have seen a lot more rigs than we are seeing come online with this kind of pricing. Usually they're a lot faster to jump on that bandwagon. This is part of something called COTS, right? Where and you can see it. So this is net positions. So this is actually like institutional positions, net long, net short, certain commodities. This one happens to be oil. And so you can see, well, large institutions are actually still slowly increasing net long positions in oil. So while, yes, there are more rigs going online, people are still buying it, right? Big buyers are still buying it, right? Gold, we can kind of see the same thing in reverse, I would assume. But yeah, this
So
week.
you think gas is
slightly
almost
up.
like a risk on play as well?
I think, yeah, actually. Well, no, risk on. Let's just jump into this. So this is, I don't want to dig too deep into that. We'll have this like every week. I think that there's a lot of stuff to look into that. We're trying to take more of a holistic view than a individual asset. I think gas will be a marker for inflation, and I think inflation is a big thing that will be that needs to stay top of mind for quite a while, if that makes sense. We have to take all of it into account. So employment cost, this is like supply. I think this will probably be a pretty big factor also for earnings. This is like, what is my cost of labor? But looks like, yeah, right now we don't have a whole lot. This is preliminary numbers that will come out at the end of the week. This isn't going to move a market by any means. So really we have a slow week ahead of us. Some basic housing numbers that haven't been moving a whole lot, and a handful of Fed governor speeches that we do want to pay attention to. So,
because I guess now the question is this month or next, or sorry, the one coming up or the one after that, basically.
For what?
For rates, or not specifically rates, but the tapering that will lead to rates.
Yeah. And again, so I'm just going to close this economic calendar. So really quick. So we just, we'll get into that, right? But hang on before you're jumping ahead. So really quick, this little orange thing is a average week move for the S&P. So I was just looking at this. So while we're jumping into the markets, last week we saw this little level here, or not last week, but if you're looking into this. So this little level is where I saw a lot of people kind of defending and jumping in right around here, right? This is actually 440. So as long as we can stay above 440, 436 was our real hard line in the sand. This is a little bit of, call it a hidden level, right? So here and here, 1, 2, 3. This is where there was a major pivot, and right now we're heading to the upside. But as long as we can stay above 440, this blue line is the 50-day moving average. We should, that would be really bullish. We can come down below 440 or below this 50-day, and anywhere in this general vicinity, I'd say if we get a low in here, that would be pretty bullish. So for now, this is looking good. If we get above this 450 level, that's screaming buy. Right now we got some room on some of these oscillators here. This is MACD. We can look at a daily if we want. Yeah, we got to flip up. This is not an RSI. This is stochastic. We're looking okay. I think that we'll probably hit a little bit of that resistance right around 450 though. So just keep in mind. Monday is usually a pretty aggressive day. A lot of us don't trade Monday morning just because of that. And by the end of today and early tomorrow, this should start to kind of level out and cool off. And that's when we're gonna really want to start jumping in. Monday volatility is pretty high, and we want to be aware of those kind of things. So the Qs closed the week below the 50-day. Right now they're trading above. This orange box is 1 week average range. And again, we're looking at this is 365 for critical support. So as long as we're staying above this, remember we're same thing, right? Lower high, lower low. And now we have a potential break in market structure. This is the prior high right here, and we're above it. So as long as we're above this level, we can stay pretty bullish, right? And if we can put in a low above that level, well, that's even better. And to get really bullish, I'd say somewhere I'm looking I'm just going to take this baseline support level here, throw on top my average week's move, and it actually happens to align up to just below 380, so call it about 378 for an upside target this week. So that's the Qs. NASDAQ or Dow, I'm just going to do a quick one, something similar. Ooh, sorry. I usually move this off. This is actually an average month's range. So Dow, a little different here. So I'm looking, we're a lot closer to the all-time high here on these guys. So I'd expect a little resistance to come in right around 253. We've had a pretty big move off the bottom. 353, sorry. 344 was our breakout point here. And so I would expect that also, as it's been kind of bounce, right? Bounce, and then break up here. This level will be our key support for the industrial sector right here. But for now, actually do kind of think we should see a little chop in this area before we're able to break out. And that would be a really good entry, probably toward, in the next couple weeks. So not right away. IWM, man, this thing, mid caps, ultra range bound, very good for our condors. Those are up quite nicely today, by the way. But again, average week move, I'm looking here at 219 as major support, and the bottom of this kind of volume area. Look at this guy. This thing is just going nowhere right now. And on the high end, 230, just under 230. So this will be good for our condors for the next probably week and a half, and we'll probably want to switch off from there. So oil, I think I do want to hit this. So I was looking at oil futures. This is crude oil futures on a 30-minute chart. This little level right here was getting defended pretty heavily. It's about $80 a barrel. So, I mean, if you're just a pure technical trader, this is like, dude, this is way extended. You'd really just kind of want to short it in general. But just like with the SPY when it first started falling off, maybe, sure. But you're at 81 and change now. We're looking at $80 a barrel as support. So if it does stay above $80 a barrel for this week, and again, this is an average week's move, this still kind of looks bullish, and that would take us like 85 on the high end. That is what I'm looking at for crude oil. So with this going higher, we kind of think about things like interest rates. And so here's the TLT. This is 30-year bond ETF. And again, inverse to the yield. So if the bond is going down, that means rates are going up. This big whoosh down is what really pulled the markets down initially. And the markets don't care right now if yields are going higher. I mean, that's expected. What they cared about was the speed at which they were moving. And right now, this is a much more orderly speed versus these big giant candles that we were seeing a couple weeks ago. So it could chop around here. I mean, this is very likely a chop zone. 145 on the low end. If it does go lower, that means rates are going higher. That would be bad for tech, but good for things like, banks, trade in the short term, right? So banks trade with the rates, rates go higher. The market thinks, oh, the banks are going to make more money. And that's bullish for that sector. One thing to know, so this is the Volatility Index Vix, and this is for an option trader. This should be your gauge. This should always be on your main chart. So if you haven't been trading for a while, or you haven't been watching this for a while, $20 right now is kind of the middle of the line mark for us. So if the VIX is above $20, what we're really looking at is not debit spreads, not buying calls or puts. We're actually looking at selling options, because that's going to tell us that option prices are pretty inflated. Where we're sitting right here, if you're between, let's say, 20 and 17, this is really kind of like time spread kind of zone. Think calendars, iron condors, things like that. You can be kind of long options depending on the asset, but you want to be very particular about where you do end up placing a long bet in terms of options. If as we get lower, and don't think that this 16 is actually the low. It's not. This is not normal. You can go back quite a bit. This is how this looks. But here is this whole area down here. This is actually where it typically trades, right in here. So if we're below, let's say, I'm going to pull this down below. Yeah, right about here, 1750. That's actually going to be good for debit spreads, right? Long positions. So this is your gauge, right? Always look at this. Where is the VIX trading today? And this should tell you what kind of trade structure you should be looking at. So as this is going down, then you can start to shift some of your positions from net short options to maybe a little bit net long options. Yeah. But always keep this on your radar. Looked at TLT. Just going to take a quick look at Bitcoin. So we had looked at some potential resistance before. We were looking at this level here. Was it here? Yeah, right here. And we did get this little chop, but remember we were saying, hey, if it goes higher, then that's going to be super bullish. And I think that, well, it's clear we did go higher. So now we're heading back towards prior highs. I actually thought we would have been there by now. But this is mostly sentiment driven. So a lot of, stuff out there right now about the Bitcoin ETFs, things like that. There's a couple of things we're going to take a look at. But just keep this level in mind, 64. It'll probably back off right before it actually hits this. So probably about 64K, expect some chop. We could pull back, but if we do break above 65 would be a good upside target. But if we do break above 65, that would be really bullish.
For Merck, what do you think about the pill? And do you think that, because since that announcement, if you look at the graph, it's a pretty interesting graph.
Yeah.
And I think at the moment right now could perhaps be a good buy opportunity. But
maybe, right? So this is
that Merck's going to get accepted and stuff.
So this
like
is
the
how
FDA approval.
Yeah, I don't trade that stuff, but this is how I would look at it, right? So this is my second kind of view, right? So this is the sector by sector, XRT, retail, semis. This is actually software, oil services, energy, financial, tech, and healthcare. What you're talking about, let's go into, is going to be IBB, right? More IBB. Is it IBB? This is biotech. Steven, help me out with this. Is it IBB or where would Merck go? What's the other one?
I thought it was IBB, but
yeah. So IBB.
You would know better than I would.
IBB, whatever. I'm gonna look for strength in the sector, right? And so, assuming that this is the sector that Merck is in, it might not. It might even be healthcare. Either way, this is not a strong sector right now, and neither one of these are strong. They're actually probably the weakest of all the sectors that I have up here. So
that's why it could potentially be a good value, because especially I know that even I think there were some more opinions coming out today and yesterday about healthcare and basically to get in healthcare.
So it's trade style, right? So if you're going to be looking for value, that puts you more in the fundamental basket of trader or rather investor, right? So for me, I'm just looking at this. Yes, we're close. I would say, okay, if I get a break above here, this is 158 in the sector, then I could really start looking at. I don't want to try and catch a falling knife, so to speak. With the broader market doing well, if that continues, just that alone really should, follow your logic. And this should be, when this turns around, this should be a real quick a very nice run to the upside for sure.
In this case, the story of Moderna has largely been this vaccine. And if the pill does get accepted, I think a lot more people would be willing to take it. And I also think that has that narrative. And I think that narrative still hasn't finished yet. The COVID.
Yeah, actually, I mean, if we're gonna like prognosticate, right? Like I think there's a push pull in general between Moderna, Pfizer, Johnson and Johnson being vaccines and Merck being a therapeutic, right? Two different things. So I think when we actually saw Merck, and we can pull it out, right? So when we saw Merck come out, so this is the same chart as the rest. So number one, Merck is currently in price discovery mode. So we don't know where the market, so this gap up here, this is when the news came out, and the market is still trying to decide what value do we put on that therapeutic, and how does it apply to Merck? Merck being a almost $200 billion market cap company.
But we had a lot of accumulation around where we are now.
Oh yeah, so we would look, okay, so from a support perspective, right? Just trading
around here. And also we got this move, which I think sometimes
we would be looking very close
to. It's really
here.
counterintuitive, but sometimes you get like a slightly positive day, but you get like a pretty big wick, like sometimes on both sides, but it's like but it's a middling candle at the end. It just stays there. Yeah. And the next day you have a bad one like this. And after that, like it's because at this moment, psychologically, you're thinking like it's done. Like if it closes below there, you're out. And a lot of people will have that. And then so I feel like sometimes in recent days that there's been, after that, there's a quick rebound, basically.
Yeah. I just look, there's some pretty major pivots right around here. So this
right?
Yeah, this does look like a pivot area, but again, I think that I'll just tag this. This looks clean.
Because for me, it would almost be a Moderna hedge.
Yeah, actually. Well, I don't. So the thing is Moderna, right? So let's just be clear, right?
Except for what you just pointed out before about the therapeutics versus the vaccine maker.
So Moderna, $135 billion company. I remember this thing at like 10.
And we're down, man. Like this thing's like been such a beast, and there's some people who are like it's gonna go saying it's going into 180. Because there's like at the end the amount of vaccines they'd have to sell to justify their actual price is like way too high and it can't be done.
Yeah.
And so actually the value and all the other products need to pan out for them. But I was told the other day that lots of people were buying back up at 300, and it seems to be the case.
Yeah, it's just you just don't know something like that one. I mean, I think Moderna has. We're getting way off topic, but yeah, there's a lot of other. Factors that could there's a ton of upside, not to the vaccine but to the technology in general, right? And if you play into that logic, that can take you all kinds of places like cure cancer kinds of places. But really quick, so IGV is the software sector. So I think knowing what we know about the market so far, knowing what we're coming into earnings season, software is on a massive rebound here. Semis are rebounding, but if you look at these charts, they're not rebounding the same way that the software sector is. Again, that's probably, you got to think supply chain issues in front of the semis. Retail looks okay, but again, inflation, we do have Christmas and all that kind of stuff still coming up. And for, whatever reason, like oil, this oil services is just been on it, and energy, an epic tear. Right. So this story together, oil, energy up, that's technically inflation up, right? Supply chain issues, but they're going up because we have a lot of buying still going on. So who do we want to be with, right? Do we want to be tech? Do we want to be financials? Probably a little bit of financials, definitely some software. We can have a smaller positions here, but oil and energy remain to be the two most bullish categories on my radar. And we want to pick our spots with something maybe like Jerome's talking about, right? Do you find a trade in something like a Merck where you can pick it up around, I don't know, 75? something like that, and ride it to 85. That's a good return, right? And I think we're off. So I did want to jump in really quick. We do have, actually, what is it? I'll pull up these guys. I like their UI. So here is this month, right? So, or this week. So Netflix tomorrow after the close. J&J today would be a trading opportunity. Halliburton today. So we have some healthcare, some energy, Procter & Gamble, little consumer staples, things like that. We actually have trades on the docket today to take a look at. Netflix is going to be the first big tech, so to speak, company to report. So we really want to see Netflix, Tesla, Lam Research. These are going to be big ones to watch just to see how does the market actually respond to their comments and to their outlooks, right? Snap will be a big tell in terms of communication sector and Facebook, things like that. So I think the rest is pretty, energy, IBM's not going to be a huge tell. We got Crocs, Mattel. Yeah, so just take a look at this, see who's coming in. If you're trading Tesla, right? So we're looking at Tesla for a break today, tomorrow, into Wednesday. Not after Wednesday. We don't want to be long any options after this, right? Netflix, if we want to take a look, today, tomorrow, not after tomorrow close, right? Got to be out of any options. And you can usually take some quick, very nice wins, just playing as we get closer to these reports, then IV starts increasing. Definitely helps us with some of our edge. So let's take a look really quick. Netflix. So Netflix just on a daily. So we do have, this is a nice little candle. We had looks like you had a good buying opportunity this morning. But this red line here is going to be kind of our dynamic support. So if we get close to this, we should bounce up. I don't know that there's going to be enough time here to place a trade on there. I'm going to skip that unless we get a major breakout above probably 640. 640 would be key on that one. Let me kind of zoom into an hourly real quick. Yeah. 635, 633. This little line right here. But again, these are small moves, right? Small percentage moves, big dollar moves. So if you did get a break above 633, you could make a move to 640, right? So that's, $5 is a good move from an option perspective. So you got a little flip up here coming. This looks actually decent short term. So maybe something like that, a break above the 633 up to 640 this week. Tesla, we got a lot of the move. I sent this chart, this daily chart, in the analyst outlook, and we are targeting this range right here. So this is the prior all-time highs, and all I'm doing on this is I'm just going to take fixed price range volume, right? And I'm just going to click here, drag to here, and this is going to give me where's most of the trading going on within this specific section, and it happens to be right below 850. So right now we're actually above that line. So what we're going to look for here, and this is very short term, right? So I'm going to drill into a 15-minute. Wow, we just broke right through that. 2 levels here. If we get above 865, I would be looking for an upside, actually probably to break through. I might want to wait till the end of the day and set an alert. Jeez, I want to say set an alert for 845, but we're just not going to get there. It doesn't look like. On a pullback, this is a 5-minute. Look at this. 860. Oh, that is an old level I had. So 860. All right. Call this. That might have been your opportunity right there. But looking at the chain, there was, my target initially was actually 880. And as I actually went into the chain, it was just very apparent that all of the volume was on the 900 calls. So quick check today. Tesla 900 calls again, 45,000 volume today so far in the first 2 hours of trade on 15,000 open interest. That's a huge amount of volume. Trading around $685 right now. Let's see. I'll just try and pull this up for you guys so I can tell you what the low of the day was on this contract. Oh wow, this contract closed Friday at 300, opened this morning at 438, and went all the way up to 800 this morning. So this opening gap, its IV is going to be pretty high. If you can get this around, if Tesla pulls back right around this 850 level, maybe 855, this contract should be trading around 500, and that would be a pretty good price to start getting interested. I'm not saying don't put an order in there for 500 and forget about it. It doesn't work that way. Volatility is going to be a factor for sure as we get closer to earnings. So the next one, I was looking at NVIDIA. We got the move already. Also, a lot of these, sorry guys, I put them out. I was looking at them and they just started going. Not intentional. So this was a level that we broke here. This is SMH. I think it was pretty beat down. And for right now, I was just targeting this 230 upside this week, right? We had this little head and shoulders that definitely played out. You can look on the 1 hour, and we got a little dynamic support going on and trading again just to the 630 level. So NVIDIA this week only. I'm not going any farther, right? We don't want to put a whole lot of money or time out there because the market is kind of uncertain right now. That 220 call, yeah, 24,000 volume again already, first 2 hours of trade on 12,000 open interest, and we got 225s trading 30,000 volume. So more volume on the 25s for this week, currently trading at $145 a piece. That looks like a very intriguing setup, either for a 220, 225 debit spread, or maybe just some quick, if you have a small account, 225 calls for some quick in and out trading there. I think Steven's Microsoft just took off also. Okay. So this is not his chart. This was mine. I'd have to go back and see what his was, but we'll probably see something similar. Yeah, very similar. I mean, this daily looks beautiful, right? Whether or not you like patterns doesn't bother me, but you can see pretty clear breaking out, right? We're over this resistance. Man, I think he was talking about 305.
Yeah, I was talking about 305.
We're basically there, right?
Mm-hmm.
So you had to have hit it early. But what I can tell you is that as we go forward, right? So 305 will initially act as resistance, and this is why we're trading for a setup for the week, right? What can happen if this green bar 306 is the possible upside just for today? If we do break above this 305 and we have something come back down to test, and you want to have have an alert set, right? This retrace, retest, and bounce up off of 305, that is a solid entry for a quick move higher. Let's take a look at the chain, which I did not do before. Ooh, look at that. 305, 25,000. Yeah, 25,000 volume in the first 2 hours. That's, we've had 3 contracts already hitting that. Trading for about $200 right now. So think about it this way. If that contract 305 call is trading for $200 right now, how much does Microsoft need to close at this week for you to make money if you're going to hold a single contract through the week? So 305 plus $225 or whatever you're paying for it, that's 307.25. So it has to close above 307.25 just because it's a $305 contract. Don't think for a second that if it's trading over 305, you're going to be making money. It's not how it works. when do they report is a good thing to check. And I think
the 27th, I think.
Yeah, so I would think that that's a good run rate, right? We'll usually see 26, something like that. Yeah, you got a week in front of you. So volatility will be climbing. And the contract that will capture that is next week, so October 29th. Not seeing the same kind of volume, probably because it's Monday. We don't want to spend a lot of money on extra time this early. Yeah, but those contracts are that series is pretty busy, specifically on the 310s. So 310, maybe look at something like a calendar spread. Selling this week, maybe buying next week if you do get that kind of break higher. That would look like what? So 310 would be buying here, selling here. That looks about right? That's a pretty bullish time spread. But again, with the VIX where it is, we're not below 15. We're still in that time spread sweet spot. So that makes sense. That's a very directional time spread, though. Just FYI, it's very directionally dependent. Not a lot of downside protection. Otherwise, you could do things like that, those risk reversals that we were talking about. Another one, really quick. Goldman Sachs. We had this on as an earnings trade. This guy just is continuing higher. Way higher. We're very close to this all-time high, 420. But it's got some serious momentum behind it. So I would not be surprised if we did get to 420 sooner than later. It's a little bit more expensive stock, so you will likely want to have some kind of spread on this. And again, Goldman Sachs, different kind of case where they have already reported earnings. So the volatility is not so much, it's not really in there as much as it was before. You may have a little bit of that burn still going down. And if you look at, wow, this week, 410, 415, 420 calls all close to 5,000 volume. Very busy chain. And next week they're looking at 420s, right? So that they're targeting next week all-time high. So let's say if you want to do something like a 420 call calendar, that'd be about $200 buying next week's $420 call, selling this week's $420 call. Very similar to that Microsoft time spread, but that is the type of trade you want to put on something like this right here. Chewy. I did want to take a look at this. So this is what I was looking at on Chewy. Little concerning. This is one of those, this is, you'll hear in the news, be in companies that have pricing power, be in companies that aren't going to be affected by supply chain, be in companies that aren't going to be affected by like consumer or inflations. Well, Chewy would be affected by supply chain, consumer, inflation. They don't have pricing power. So this is in the opposite of the sweet spot, although we like it quite a bit, and we're right below this critical support right here. So what I saw, it's a potential short. We're coming up to it right about here. Shorts, I don't necessarily want to be long options per se, but you could sell a credit spread, anything above 65. Yeah, look at that. 65 and 62 was really my number to get actually bearish. We're not really close to that, but just keep in mind, hey, we're right on this level. So if you do want to look out potentially swinging something, I would be looking at like a November monthly $60, $55 put spread, buying the 60s for November, selling the 50s against it for about $100. That's a risk 100 to make 500 or to make 400. Or you can sell one of these credit spreads, right? Maybe do both, selling a $65, $70 credit spread for that same November expiration. That would actually pay for a debit spread. That would be a free risk reversal. Maybe we can model that for you guys later. We'll see. Need the break though. So set your alert. And be on. A couple things I do want to pull up. You know what? Here's my view right now. So Affirm currently breaking. Do we have some levels here? All-time highs again?
Yep. All-time highs.
Big time breakout, right? So breakout is right here. I think this was actually a little bit of, I saw some bad news on Upstart, and Upstart not getting nearly beaten up, not getting beat up near as much as I thought they would. Still firmly in this uptrend, actually. Apple moving up towards its 50-day. So I think this could be, I mean, again, just careful, right? Supply chain, consumer, inflation, that's going to affect them. This is just a Super Bowl breakout. So in this instance, we kind of want to drill in and say, okay, yes, this was the prior high right here. So this is going to be our main key support. And then we have, yeah, this, actually, it's going to be this whole level. So anywhere in here, if you get some pullbacks closer to between 155 or 150, should be a buyer. The problem with buying an active breakout here, if you're trying to hold this for more than a few minutes, the probability of it pulling back to here is extremely high. So if you're chasing at this point, it's got to be seconds, and you have to constantly be seeing, new high, new high, new high. If you're not, you need to get out because the pullback could be pretty tough. For right now, I just set this box, set this alert, and hey, this is the level I want to be adding on this kind of a pullback. You can even see, okay, so we got this level, this level. This might be the best you get right here. Who knows? Something like that. So I'd set them all. Keep it on your radar. Keep it on the screen. Roku was not on the list, but it's in the rotation constantly, and we are getting a little bit of this breakout. So today we're testing this 50-day, right? This is going to likely act as resistance. We are I am looking right here, right? As this being the prior high right now. So let's say, right? If this is prior high, right? And we have a low, we know that we have a new low, higher low, right? And if this holds, we have a higher low. Let's say if we have this micro trend break, right? So high, so lower high, lower high. Technically, this is a higher high. Yes, but you could very easily get caught in a bull trap. So I'd like to see this push even more. So for right now, for me, I'm in a time spread, just to be clear, right? So I'm in this right now, super small position. And I'm looking here. Really, if we can get above this, so we got this here, this whole area, right? Right there. If we can get above here, I think that everybody and their mother will notice this, and that would be an epic breakout of massive proportions, very likely, right? All this TA stuff is great. I think what you should know is that everybody reads the charts. We all read them the same or similar ways. So if we see this, they see this, and it becomes kind of like this self-fulfilling prophecy, believe it or not. So everybody doesn't trade the same way, but for the most part, we see the same kind of things. It's just how we interpret them. But very close to turning extremely bullish here, I'd be a buyer of the stock more so than the options. The options, you want to have some kind of downside protection there. Is there anything else anybody wants to take a look at? We looked at Merck. We looked at Moderna briefly. Affirm, Upstart. We can do Chewy. I'm just going to quick check Asana. Asana, we didn't see the breakout that we were going for, and I don't see it. Our Triceratops was invalidated. So it can breathe for a little while. I'm actually bring this down to 110. Call me when you're at 110. Something like that. Or call me if you break above 120. But for now, I don't need to be trading this. Not app 11 was a different alert. That is, wow, way above max target. Apps here. Another one way in this breakout mode. Going, wow. So, Digital Turbine, APPS. This guy, software pricing power. Yes. Definitely in an active breakout. So this is the type of pattern you want to look at. It's really just a pennant, bullish pennant, but very dependable breakout pattern. Did you see that? App 11. We had sent an alert on this a while ago. Look at this, 90, almost 95 now. All right. Good job there. All right, so I think that's it for now, unless you guys had anything else. Ping us if you need anything, if you have any questions on any of the charts, or if you want us to take a look at anything, just shoot it in the day trade channel. And yeah, I think we're good. Do you have any questions? No. How are the Tesla? Looking, yeah, low IV. Did we hit this? I think we did. High volume. Low IV, yeah. Actually, Tesla. Tesla IV. It's not necessary. Let's see. We use this site here. Can we tell you what the percentile is now? It's pretty low, current IV. So it will be climbing as we get closer to the report. But yeah, Tesla IV is is very low right now, believe it or not, compared to where it used to be. But all right, guys, that is it for me. I think we are good. All right, see ya.
Thanks.